Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries of big companies. And let me tell you, ENBRIDGE has a new report out full of numbers that tell quite a story about their performance and what's next for this energy giant. Before we jump in, if you love getting these easy to understand breakdowns of complex corporate filings, make sure you hit that subscribe button. And for more behind the scenes discussions and to connect with a community that loves digging into this stuff, join our Discord server. The link is in the description below. Alright, so what we're looking at today is an 8K filing from ENBRIDGE INC. Now, an 8K is basically a report that companies have to file with the Securities and Exchange Commission, or SEC for short, whenever something really important happens that their shareholders need to know about. Think of it as a news flash from the company directly to the investors and the public. This particular report was issued on August 1st, 2025, and it's telling us about events that occurred around that time. ENBRIDGE is a pretty massive company, as you probably know. They're a big player in the energy infrastructure world, especially in North America, dealing with things like pipelines for oil and gas, and also getting into renewable energy. So when they put out a report, it's usually worth paying attention to. Their shares are traded on the New York Stock Exchange under the ticker symbol ENB. This means a lot of people are invested in them, from big institutions to individual investors. The main reason for this filing is to share their financial results for the second quarter of 2025, which ended on June 30. Do this regularly to keep everyone informed about how they're doing financially. So what they've essentially done is release their earnings, and this 8K is just the official way they're telling the SEC and the world about it. It's a bit of a technicality, but when they say information isn't deemed to be filed, it means for certain legal purposes like lawsuits about the accuracy of the statement itself, they're saying this is just informational and not a formal guarantee in that specific legal sense. It's a way for companies to share their news without opening themselves up to certain types of legal scrutiny tied to those specific sections of investor law. And the really juicy part, the actual financial details, are usually linked as exhibits. This tells us that the press release itself is the key document here. It's where we'll find the numbers that paint the picture of ENBRIDGE's performance. Now let's talk about what those numbers mean. Since this is an earnings report, the most important stuff is in that press release they mentioned. While this filing itself doesn't contain the big tables of numbers, it's the gateway to them. Imagine getting a sealed envelope with all the important financial news inside. This 8K is that envelope. So looking at earnings reports for companies like ENBRIDGE, we always want to see how their revenue is doing, how much profit they're making, and how they're managing their costs. For an infrastructure company like ENBRIDGE, revenue often comes from the fees they charge for transporting oil and gas through their pipelines, and increasingly from their investments in renewable energy projects. When we talk about quarterly results, we're comparing their performance in the most recent 3 months to the same period in the prior year. This helps us see if they're growing, shrinking, or staying steady. A company like ENBRIDGE is a giant, so big percentage swings are less common than for smaller companies. But even small changes can mean millions or billions of dollars. For example, if their revenue from their liquids pipeline segment went down by, say, 5%, that could mean they transported 5% less oil. This could be due to lower production from oil companies, a shift towards other transport methods, or even economic slowdowns affecting demand. On the flip side, if their renewable energy segment grew by 20%, that would suggest their investments in wind or solar are really starting to pay off and contribute significantly to their business. Profitability is also key. We look at things like net income, which is what's left after all expenses are paid. If net income is up, it usually means they're managing their operations efficiently or have increased their revenue. If it's down, it could mean higher costs, increased competition, or issues with specific projects. We also pay attention to how much debt the company has. Big infrastructure projects require a lot of money, so companies like ENBRIDGE often carry significant debt. The important question is whether they can comfortably manage that debt with the money they're making. If their earnings are growing faster than their debt payments, that's a good sign. If their debt is becoming a larger burden relative to their income, that's a warning sign. ENBRIDGE has been making a big push into renewable energy, and that's a crucial part of their story. This shift away from fossil fuels is a long-term strategy for many energy companies. So we'd be looking at their renewable energy segment's performance very closely. Are the new projects contributing positively to the bottom line? Are they securing more renewable deals? This is where future growth might be coming from. The filing doesn't have the tables here, but it points to Exhibit 99.1, which is the press release. In that press release, we typically see key figures. For instance, if it announced that their liquids pipelines revenue increased by 3%, that's solid performance for a mature business. If their gas transmission and midstream segment saw a 7% jump in earnings before interest, taxes, depreciation, and amortization, often called EBITDA, that's a strong indicator of operational success in that area. Also, if the company reported that its distributable cash flow, a measure of cash available to pay shareholders, rose by 10%, that's excellent news for investors looking for dividends or share buybacks. These are the kinds of numbers that investors obsess over because they tell you how the company is actually performing on the ground. Warren Buffett himself often says to look at the underlying business and not just the stock price. This report and the press release it references is exactly where you find the details of that underlying business performance. And you see here the signature of David Taniguchi, who is the Vice President and Corporate Secretary. This confirms the report has been officially submitted. So, looking at ENBRIDGE, they are a company in transition, trying to balance their traditional, very profitable oil and gas pipeline business with the growing opportunities in renewable energy. This second quarter earnings report would tell us how well they're executing that strategy. Are the new ventures really compensating for any potential slowdowns or increased costs in their legacy business? Are they managing their massive debt load effectively as they invest in new areas? The real story is in how these financial results signal their ability to adapt to the changing energy landscape. If they're showing strong growth in renewables while maintaining stability in their core business, that's a very positive outlook. If their legacy business is struggling and the new ventures aren't picking up the slack quickly enough, that could present significant challenges and risks for the future. In my opinion, ENBRIDGE is a company with immense scale and critical infrastructure that will likely be essential for decades. Their diversification into renewables is a smart move, but executing such a large-scale transition is complex and carries its own risks. We need to see consistent growth in those new areas and a clear path to profitability that offsets any pressures on their traditional segments. The key is their ability to generate strong, consistent cash flow to manage their debt and reward shareholders, all while navigating the massive global shift towards cleaner energy. Alright, that's our quick decode of this ENBRIDGE filing. What's your take on these kinds of reports and what they mean for the future of energy companies? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up. It really helps the channel grow. And don't forget to subscribe for more insights into the world of corporate finance. And again, check out the Discord link in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next video.